Westpac's third quarter profit fell 2% and the shares fell more than 4%, mainly because of a statement from the CEO, Gail Kelly, that the bank is now in a slow growth period and things won't be going back to what they were like before the GFC. As a result, Westpac is now in staff cutting mode. The All Ordinaries fell 30 points, a third of which was Westpac and the rest was the other banks and the resources companies, all taking a bit of a breather after yesterday's exertions. There was a solid gain on Wall Street, 2.2%. The Italian exchange had a huge rise last night, but other European markets didn't do much. And the Korean share market also jumped more than 4% today, but the others in Asia were flat. On commodity markets, gold went up a bit, but it's still a fair way short of last week's peak of 1,815. Oil jumped 3% and base metals were steady. And the Australian dollar crept up to 104.5 US cents, but the overall performance of the currency today was patchy, with the index up slightly. Now, the Aussie dollar, gold and the All Ordinaries index were tracking pretty closely together up until April, and then it was every line to itself. Gold became a safe haven and took off, the local share market tanked, and no one could decide about the Australian dollar, so it stayed steady against a falling US dollar. The minutes of the last Reserve Bank board meeting came out today. Nothing much to report apart from more stuff about global uncertainty and the two-speed economy. There was also a conference at the RBA at about the same time at which this graph was presented, among many, many others. It's really the source of our two-speed economy, China's booming production of steel. It'll soon be making more of the stuff than the rest of the world combined. And that's finance.